What's going on, guys? Welcome back to the channel. Let's talk about the current market conditions. What is going on with the stock market? I've been getting asked that question every single day. Said, should I start investing? Should I take my savings and put them in the markets? Historically speaking, anybody that bought during a crash would have made a lot of money. But is this the right time to start investing in the stock market? Now, this isn't financial advice, guys, but I just want to give you my 2 cents, just like always. A few videos back, I told you that the market will crash even more. And since that video, the market crashed by another 20%. However, you go to comment sections on videos, you ask people, everybody says, start buying, I'm investing, I'm putting my money. And which is fine, by the way. Because the market already crashed and priced in on the speculation of the future. But there's one thing missing that people don't actually anticipate, because they believe if the market crashes, the stocks are cheap, I take my money, I invest, it goes back up. Okay? So there's a reason why the market crashes. It's for the speculation on the future and what's going to happen in the future for many companies. And many companies might go bankrupt. I mean, just the 3 months the damage that has been done will take about a year to recover. And what happens when these companies in the next quarter start releasing their financials, their earning reports? Well, obviously, they're going to end up bouncing back down. So that is a risk you have to come to terms with. Should I buy now and play the short-term volatility upwards when the market gets some good news and gets hyped up? Or should I wait when these companies that have suffered this quarter will come out with news and start recovering? Right now, if you want to position trade, then you have to be able to take that risk in the emotional roller coaster. Because at the end of the day, guys, this is going to be a waiting game. Sure enough, you'll probably make a lot of money if you invest. And I know there's a huge fear of missing out by a lot of people. They're like, this is the best time to invest. Then they see the market bouncing back up and they say, okay, I don't want to miss out. Let me take my money and let me put it into that stock. But that's a dead cat bounce. A dead cat bounce is basically, even a dead cat will bounce, but then it comes back down and it doesn't move anymore. So these kind of upwards volatilities you see happening in the stock market, it's just a pump because of hype. But there's always this fear in the back of the investor's mindset, and that says, okay, if you tell me you're gonna do this, the damage has already been done. So I need to see what the damage is in the next quarter when these companies start releasing earnings. So that's one thing many people are missing in their analysis and investing strategy is the speculation on the future is happening now, but what actually happens when the speculations is even worse than what we speculated it to be. Okay? And a lot of businesses will suffer. As you see, guys, we've entered a global recession. Now, sure enough, a lot of us, our portfolios are in the red, but for those who haven't invested just yet, you guys have the upper hand here because you still have the cash. If you wait even more, we might see more developments, the market dropping further. Or if you want to take your money and start buying up shares now and just start adding every week, then go ahead. But we don't have a direction just yet, right? Global markets have crashed. And when the reversals happen, it will take a few quarters. And for me, I believe it's going to take at least a year to see some recovery. Because the damage has been done. Just 3 months of shutdowns and lack of customers for many businesses has damaged their revenue, their sales, their cash flow, dividends, and many are just struggling right now trying to get bailouts from the banks. So that's very important to take into your analysis, guys. Be patient. I believe the market still has more room to kind of drop, but it's not going to drop for long, and it can't drop for long anyway. We've seen in 2008. In 2007 it started dropping. In 2008, late 2008, the market recovered. And you might see that happening here with this current market crash that we see. It will take a year to kind of undo the damage. So if you're that guy who doesn't have emotions, dead inside, then you might position trade. Position trade just simply says this stock is undervalued and I don't believe it's worth that much. I believe it's worth more. So you end up buying it and holding it for the future, for a year from now. But why enter at this price when there could be a potential of a further drop and you can buy at even a cheaper price, or you can do both. So right now, for those that have money saved on the side, you probably should consider looking into being patient. There's going to be a lot of dead cat bounces, so you're going to see the stock market reversing upwards, but then it will dump again. But the damage has been done, and it will take at least a year to recover, guys. And we've seen that, history has told us before. Again, that's for investors and swing traders. For those who trade in the stock market, day trade, short-term volatility, I mean, we trade every day, doesn't make a difference because we trade short-term volatility, and we just have to adapt and adjust. A lot of you guys have been seeing that lately on my Instagram and even here on my YouTube stories, sharing the results of you guys who are day trading. So that is my 2 cents, guys. The market will recover eventually, but it's just a matter of patience and a matter of when, right? That's it. If you're that guy that can hold on, then you'll probably come out on top. And for those who have money invested already, your portfolio is probably in the red already. So your only option here, if you have the spare cash, is to put more in and start buying in more. Or you can just sit and wait, right? If you sell now, you'll probably lose anyway. But if you wait, you'll probably come out a winner a few months later. But again, it is a waiting game. It is going to be a patience game, guys. So hold on. You know, don't be fearing the missing out part, because that's why investors dive into, you know, a lot of people would have dived when the market hit 10% down. Another would have dived when it recovered by 8%, thinking that, you know, the market was gonna, I guess, reverse upwards and continue. But this is a bear market, and this is what happens in a bear market. It reverses upwards, then continues down, upwards, then down, until all the big names recover, and they usually drag the stock market upwards. But I see a lot of people saying start buying, start buying, start buying. If you end up buying now, well, you're buying at a place where there's so much uncertainty, and you still haven't found out what the damage is, which we will soon enough, in the next quarter and the quarter after. And it will tell you if these companies will be bankrupt, seeking out more loans, and yeah, the big names with cash flow and reserves will win. And those usually are the ones that make up the stock market. So stick with the high cap stocks, stick with the big brands, big names, those who are not affected by the coronavirus. I wouldn't go near airline stocks like American Airlines, the weakest one. I would probably go for the one that has the cash reserves. And yeah, hopefully guys that made sense for you. Appreciate you for watching. Smash that like button, and I'll see you again for more videos, just like always. Peace.